Hi everyone and welcome back to today's morning report on Wednesday the 17th of February with me, Rich Pro Market Analyst at Antec Markets. Let's look at sterling dollar now. We've just had out the unemployment and earnings data for the UK. Unemployment stayed at 5.1% actually. It was expected to dip back to 5%, but slightly higher unemployment data than expected. But the average weekly earnings growth ex bonuses actually improved slightly to 2.0%, up from 1.9%. The expectation was for a slight decline back to 1.8%. So the reaction that we've seen on cable is interesting. In the absolute aftermath was that there's about a 30 pip decline, but that's basically been all retraced by now, and I'm not surprised by that because I think this is should be. I mean, it's a mixed report, you'd argue, but I think that the fact that wages are slightly higher than expected, I think that's the big driver of this report. So that I think should be sterling supportive in a net basis, and I think ultimately that could be what we're going to be seeing. But ultimately, the big technical breakdown below 43.50 is the big move in the last couple of days, and that is the move you need to be looking out for because this has significantly changed the outlook on this chart. We had, prior to that move, we had a consolidation where the market was sort of consolidating above the support 43.50 and also the 23.6% fib level. 43.50 was a big old pivot level. That's broken yesterday, confirmed by a closing breakdown. You've got these momentum indicators which are turning negative as well now. You've got the RSI breaking below that old uptrend. You've got the stochastics falling quite sharply, and the MACD lines rolling over at the neutral level, which is again not positive. So I'd actually say that this is actually turned into a chart that you're selling into strength now. I'd say on the hourly chart got here, this break below 43.50, you use 43.50 towards 44 figure area, sort of 50 pips worth of sell zone in my opinion. I think 43.50 to 44 figure would be an ideal sell zone. You've got these moving averages all turning lower at the same time in bearish sequence. That is negative. Momentum indicators are negative. You've got the RSI failing at 60 in the last couple of days, going back to 30. That's negative. You've got the MACD lines on the hourly, much more negative, and stochastics as well. I think this is all a negative outlook now. I think so 43.50 to 44 figure, if you've got a rally into that, I'd use that as a selling opportunity. I think that ultimately we're going to be seeing probably a move back. I mean, the initial support comes in at 42.35, which was a bit of a pivot line historically. 42 caught those lows there, bit of a breakout and sort of subsequent lows and lows. So there's a bit of a support there, and interestingly that we saw the low 42.42 just now. I'd say that is sort of your first line of support that could well be tested, but ultimately I think 41.47, which is that low there from the 29th of January, could well be tested, and we could even see a full retracement back to 40.80, which is that key reaction low from 21st of Jan. But yeah, this I see as a fairly important breakdown, and on a near-term basis, and rallies are a chance to sell. So that's my outlook on sterling, and I'll wish you good luck in your trading, and I'll speak to you later. Thank you.